All right, I'm back in the future for, I guess, the United States. We're over in Asia still, and a lot to go over. The last video I did, I gave you guys the idea that my observations, everybody, one out of, I don't know, 7, 8, 9, 10 cars, 1 out of 10 at least, were driving Teslas in Hong Kong. It was bizarre, man. There were white ones and blue ones and red ones and little ones, and quite frankly, that what people didn't realize possibly was not just the demand in America, but when they say China, Hong Kong, I couldn't imagine what Beijing's like. So that's why we had such an enormous reaction out of Tesla's earnings last night. And so when you do a broken wing butterfly, if you're right but yet wrong, and I was right and wrong. So why was I wrong? Because the market went way beyond the body of the butterfly. So when you structure an options trade, if you're, say, for example, like we did, the 25 to 35 is 10 strikes wide, and from 35 to 40 is 5 strikes wide, and the market surges past all the strikes. Well, if you're in a balance fly, meaning 5 wide to 5 wide, from the outer wing to the body to the outer wing, guess what happens? You break even, or maybe you might lose some money. So this was a great way of putting a low risk, and that's the key. Because, I mean, we could have bought, outright options and on calls, but let's say you bought the 240 calls. Guess what would have happened? Probably wouldn't have worked, right? 1 out of 10 times it works. So bottom line is, it was a low entry fee to get into the trade. The market went down first, allowing you to get into the trade. So that's the good thing. So it's one thing to call the market. It's another thing not to take action or get filled on the trade. And that happens a lot in this business. So I want to go over a bunch of stuff that's happening in the overnight session. And you're going to see that the regulators did not put through or pass through Tommy. I think it's Tommy, the Coors, Michael Coors. That's it. I'm sorry. Michael Coors with Tommy Chu. You have shoes, and then Coors, Versace. So Capri Holdings is down about 45%. So I don't know if that's going to be a disaster, but on the other side of the coin, who was looking to buy them out was Tapestry, Coach. You'll find TPR as a symbol on Coach, or old Coach is now Tapestry, TPR. Capri Holdings, CPRI. But I've always been a fan of one company because I think the higher end luxury, which obviously everyone saw it in the news, every store was getting broken into in LA, and all of the robberies that were going on in California, Louis Vuitton, right? But Louis Vuitton has, under their staple of what they've acquired, Stella McCarthy, that's Paul McCarthy's daughter, actually. Tiffany's they bought out, Givenchy, Fendi, Dior, Christian Dior, Sephora, makeup, colognes, Moet, Hennessy. Let's see, what else do they own? Real estate. Lots and lots of real estate. If you go to Paris, there's a shopping I don't what you want to call it, a shopping mall or facility. It's huge. It's like 3 blocks of buildings, and it's the gourmet food. It's kind of like the Harrods of London type of thing, right? It's called Le Bon Marché. They also own real estate in Miami, New York. They're not just buying and leasing or leasing stores. They're buying real estate and putting their stores there. So again, they are amassing a wealth of fortune. So let's take a look at what might make sense, and we're going to go with LVMUY. So if you look here on the charts, you go, wow, that's a lot of lines, person. Well, this is the monthly chart with the quarterly pivots. And I'm not a big fan of this kind of triple top on a monthly basis. It tells me it might come in a little bit more. One of the things that I think they're doing is they're spending too much money in acquisition mode. They're in acquisition mode. They're putting a lot of money to work here. But they're also taking market share. So when you say, well, Fendi and Christian Dior and people go shopping on the higher end stuff, you got to realize that eventually sales have to generate and pay for real estate taxes and leases and et cetera, et cetera. So I'm a fan of the company, but I think I'm a fan of the company at lower levels. And so if we get a washout in the retail sector in the next quarter, that's between now and the end of the year, you got to be, if you're going to have your portfolio or any stocks involved in retail, I think the high-end retail, Louis Vuitton's on your charts, but at what price? And I think somewhere, between 120, and if we expand this chart up here, and you'll notice, I don't know if we were going to return back to where we were in 20, and I think the cat's out of the bag for this whole move, but somewhere down at the 119, 120, that's a quarterly pivot support. So we could get one more month. That would be what? Next week. Next week is the beginning. Friday's November 1st or the 2nd, something like that. And next week, believe it or not, a week from now is November. So on a monthly chart, any further relative weakness, I think we can be looking to pick that up. I like this momentum volume indicator, and it tells me that any short-term sell signal will be met with longer-term buying interest. So I would look at a Louis Vuitton for a longer-term trade. I think with the acquisition of what they have under their umbrella and the state of the economy and the impression that China is still doing a lot of stimulus to get their economy going. A lot of people are disappointed and maybe overreacted a few weeks ago on Alibaba. Let's talk about China, because it does relate to what Louis Vuitton says, that China's their clientele in China isn't coming in buying high-end product yet. But they will when confidence comes back. But does confidence in lower interest rates and stimulus to get people to buy a house and cure the housing crisis that is occurring in both Hong Kong and mainland China, is this something that's going to be cured overnight? And I've been saying no. I mean, you just don't lower rates and then boom, magic wand, everything comes back together. I think a lot of people got overexcited. Let's take a look at this chart on Alibaba, and we'll wrap this up real quick. A lot of people in the news bought it up in here. We liquidated our long holdings up there, as you know. Now, we are looking to establish a new position in Alibaba per our newsletter. Now, many of you do get the newsletter, and you'll know that we have a lot of still positions on. And by the way, we cut off half the position at 44.20 today before the market opened. We placed orders to dump. We got filled on a full position. We had a half position on UPS, by the way. Market dipped, got filled. Market ripped on earnings, dumped half the position, picked up a quick 10 points on UPS. Nice trade there. I'm going to just go up here and just talk about Alibaba, and here it is in and you can pause this and you can see exactly what we're looking at doing and lower entries and certain things. For the record, Louis Vuitton's not on this list yet because I've got too many positions on right now, and I think Louis Vuitton comes in and we got some time to get in it. But anyway, Louis Vuitton, I'm looking at a split fill area here, and I think just as I've been true to what I've said to you on previous videos, if you pull back in, you fill this gap, this old peak. I mean, if people got excited and listened to the news about China and, you got to get into China because, the stimulus, and a lot of people did. So if you bought into Alibaba based on that, and you bought it at 115 and the stock goes down to, let's say, 92, whoa, 20% starts to irritate a lot of investors really quickly, and they start to panic and sell out. There's a gap in the market down here, and somewhere in that zone I want to cost average in, and that's what I'm doing. So I do believe old swing highs plus a gap and pivot points in that general target area, Alibaba is going to give us some good returns, or good low risk, higher return opportunities. Let's look at another company that people may not have remembered. It's I can't pronounce it. Pidui. It's PDD. It's the parent company of Temu. Gap lower because the Biden administration was going to investigate them for dumping, and then China started stimulating and doing interest rate cuts, and it gapped higher. So PDD, I think, still has, I don't know if it's going to get to 107, but I got 105. 105 is my target. 100, 105, the gap down there. I have to wait on that, but a low close doji, follow through weakness on the momentum of the person's market catcher, that's a relative strength index. I think we get an opportunity to buy that stock lower, fill the gap. The only way you're going to get in that, if it comes down and fills the gap, it's going to be like a quick pop. So watch this in extended hours, number one. Number two, you may want to have a small order in there to get filled, maybe slightly above it, like maybe go like 108 or something like that, and a small order, because then you'll be in it and then be alerted to follow it, because a lot of times we forget about things, right? So I'm a fan of PDD down here. Last but not least, JD.com. And I switched from general retail to certain things in China because it kind of relates together. JD's holding up the best once again. Old swing high, over gap, intersects with the confluence of person's pivots right around that 34 and change. If you put a gun to my head and said, which one are you going to buy? I'm going with BABA, technology, artificial intelligence, and again, the Google of China. So I'm betting on a little recovery in China, but I think the translation is simply this. Stimulus comes, people need to react a little bit. Remember, China is not really a celebratory country of Christmas and the holidays, so sales might be a little bit slower, but Chinese New Year's is in next year, in February generally, right? So I think we got time for the Chinese trade, and you want to still focus on that. All right, so let's move on to other things. I spent some time on Riot blockchain the other day and Wolf, and how, if you missed Wolf, how do you trade Riot? And I spent this whole time about higher lows and et cetera, et cetera. And Riot's breaking up to the upside, and I think it's probably got great relative strength, good volume, everything's firing on all cylinders. That pivot resistance at around $11 kind of worries me, and also somewhere around $11.50. So this is a trade that may have gotten away from you, and so therefore I don't want to be chasing that one as much. But I just also want to point out that Riot next week has earnings on Wednesday. So next week is going to be a pretty wild week. We've got, let's review, Google coming out with earnings. We have a position long in Google, and I think it's looking a little bit better because, I mean, it's been going sideways and the momentum of the volume just dried up. We've got Chipotle Mexican Grill, newsletter traders. You know that we've got a small option position on that one to the upside. McDonald's, listen, I think the quarter pounder with cheese is back on the menu. It's sad that a fatality happened due to E. coli illness, and a lot of people got sick. Same kind of thing happened with Chipotle Mexican Grill, if you remember, a couple of years back, and they survived in spades. Man, they did well. Still, this is a fan favorite, Chipotle Mexican Grill. Mickey D's, by the way, the restaurant, fast food. Look at this chart. Overreacted to the downside, follow through back to the upside. So I'm not supporting to buy McDonald's up here. It's a $300 stock to begin with. But CMG, I think they're going to have some pretty stellar earnings, and they should have some pretty good guidance. And maybe they announce something like, people are laying off McDonald's a little bit, and they're going to swing over to maybe a little bit of a burrito bowl feature here with extra avocado dip on Chipotle Mexican Grill. So my bet is to the upside using an option trade. That earnings next week. Next week we have Biogen, we have eBay, we have Meta, MGM, Microsoft, Riot, like I had mentioned, and a host of others. So those are the top ones. Visa's coming out. I think there's too much to focus on, and we have just a very finite amount of cash to work with. I think every investor would know that. But in the holiday season, just today, we had Deckers, which had a great earnings report. Lululemon's coming back. We want to buy the dip in there. I don't know if it's going to get there, so we'll kind of watch that. So this was the newsletter that came into this week that we did. This was from Monday. All our investors and subscribers got access to, and we trade off of that. We did get a couple neat things. Got filled on Boeing, and that immediately gave us a couple bucks profit. Boeing, I'm a little nervous about it. I'm not gonna pull strings on it. Let's take a look at Boeing real quick. Boeing came down, filled us. I kind of like the relative strength improvement. I like the fact that we were in a daily buy, so we bought the dip, and that was coming into this week. It finally pulled back to us. Now what do we do? Well, like I said, we're up a couple bucks on the trade, and is this a long-term trade or a swing trade? And to be truthful, it's probably going to be a swing trade. And if it is a long-term trade, I'm sure I'll have if I get out of it, I'm going to have an opportunity to get back in. So I'm going to probably take this as a swing trade. We'll send an email alert out to our subscribers. And that's one of the things I think if you're watching these YouTube videos, you get kind of a taste of what we do here. You see the consistency of how the indicators work. And that's the whole purpose of me doing the YouTube videos, to say, listen, if you're using Thinkorswim, if you have wealth charts, if you have Trade Navigator, Genesis, if you've got my package with TradeStation, which is literally off the charts for me, it lists everything I have, then how do I use it? And as you can see with this radar screen on TradeStation, I have all the special indicators that I like. moving average of volume. I have my relative strength. I've got my PMC color coded. I've got my multiple time frames with persons pivots, flashes of high closed doji, PPS signals, everything that I need to look at how good or possibly a trade can be is right here on the radar screen. I hope you found tonight's video or this morning's video helpful. Good luck on this market next week. I'll be back in the States and look forward to seeing you guys on the next update.